Hi guys, this is Simon with Trade and Perform Coaching, doing a trade review of the key trade locations from the markets that I cover. Those markets are primarily the Euro, ES, the S&P 500 E-mini futures, the Nasdaq 100 futures, the 30-year note. Let's see if I'm missing one. Euro, and crude oil. There we go. So. The idea behind the zones and the review of the zones, so the objective is to give subscribers to the room and myself key locations from which to make high odds, consistent, good trading decisions, right? And to know when we're at location to make a trading decision and when we're not. Very clear and very forward. You need an edge, right? You need an edge. Location is an edge, right? Trade location is an edge because the market responds from these locations consistently, right? And so it lowers the amount of decisions you have to make, because if you're not at a key location, unless you're an advanced trader, there's fewer decisions to make, right? And if you are not an advanced trader, you need someplace where you can focus, right? If you are an advanced trader, you'll have additional setups, right? And then the second idea is to remove what I call visual locations. Visual locations are places that day traders cite. Those are prior day's high, prior day's low, a significant swing high or a significant swing low. Those are areas that day traders use to try to make trades work. And the odds of them working tend to generally be less. Where institutions focus their efforts are places where the market has spent significant time or significant volume and it looks to come and defend them, right? So let me give you an example. This is how the chart looks, right, when everything's all marked up. There's tons of locations, there's lots of information, right? If we copy that chart over, right, file, and before I keep going on this, I'm about to strip this chart down so everyone can see what I mean here. I do need to pop up the disclaimer real quick. If you want to read through it carefully, you can. Here, I'll flash it on the full size. You can pause it and read it. But basically it says this is for educational purposes only. I am not soliciting you to make a purchase or a sale of any type of security. Past performance is not indicative of future results. Please don't trade capital you can't afford to lose, and consult your registered financial advisor and your risk trading plan before ever taking or making any type of trade. So, number one, if we strip everything away from here, so these are things like this is Globex low, these are volume points of control, key areas, right? Open gaps. Or key areas and then visual locations. So let's strip away all the visual locations, right? And do that in this chart here. We're going to remove the gap, remove the Globex high, remove the volume point of control, right? We're just going to strip Friday's high, again, visual location. We're going to remove that. And we're going to remove Globex low as well. And what we're left with on today's chart, this is ES, is a very simple white zone, right? And what you'll notice is on that white zone, we opened up in the white zone, made an attempt to push in. It closed the gap just above the white zone, right? And then we rejected down for 2 and 4 points. That's the typical stat that we have. Last month, if you took each white zone, there was approximately 96 points available. That doesn't mean that I captured 96 points or anyone in the room did. Some people may have, some people didn't. But if you follow the structure, right, and the structure is a stop 2 points behind the zone, scales at 2 and 4 points, right? You scale at 2, move stop to break even, and then attempt to grab 4 points on the next trade. If you have bigger trailers or you're a more advanced trader, you can leave the trailers for bigger rotations if they're available, right? But at 2 and 4 points, last month approximately 96 points were available, and that's just from the white zone, which is the highest odds location. And then you can see how the market treated it. We opened up into the white zone, rejected, unable to push behind. The blue line's the opening print. We reject down, push down, come back. Now remember, this is a little conflicting, right? A little bit. Because you have this idea of buyers are in overall control, but the market has to get above and really exceed above the white zone. And you can see exactly how it treated that, right? So we came in, we rejected out, right? Rotated back up. The bottom area rejected for almost an hour, right? Kept this underside. And had the market been weakened, buyers had not been in control, this would be a great area. So you have to adjust that's context, right? This would have been a great area to get continuation lower. As it stands, right? As it stands, buyers are in control. So Really on shorts, you want to focus on first time into a location, rotation lower. The other challenge here, and I do put out challenges, it's hard for a lot of people to take the trade in the first 5 minutes of the day, and there was no second test right here of the opening print, which I personally like to use. I like to see us underneath the opening print before I take the short. But all that being said, the key question is, did the white zone provide a great location to make a trading decision? And it did. We were unable to get above the white zone and make any type of significant impulse move above. The push and the open into the white zone provided rejection down, right? And this also off this Globex low, right, provided a push back towards where was the target? The white zone. Pretty straightforward. It's just a really key location. If we look at the other zones as we pull them in here, and I'll just go a little bit lower, right? The zones below, this was my primary target for long, 24.61 1/4. That's still in play overnight tonight. I've expected a responsive buy. First time in there, it just didn't hit. This is where I intended to go long today. And this is cool. And let me tell you why this is cool. Globex low was a visual location. When the markets doesn't have a lot of volatility, it works fine as a trade entry, right? When the market is more volatile, those locations get blown past. You can see we couldn't even test Friday's low, and buyers are in overall control. So the 2 and the 4 point scales to the downside worked, and then your target would have been the white zone back up. I would have preferred to have been able to get along at a 24.61 1/4. Didn't happen today. Maybe it'll happen tomorrow. Let's go look at the next chart, which is NQ. Right, it's over for a second. Tomorrow's chart's already posted up. Let's see if we can get back over here. I don't even think I need to move this. So pretty clear on NQ. This was the white zone right here. Highlight it. And there was actually 2 white zones. Like this. This is a white zone, and this is a white zone. And the market behaved perfectly logical for the white zones, right? So key support resistance area, we open up. You can see that right to the tick out of the gate, right? I want to say that again. Right to the tick out of the gate, we open up, we push to the tick. I don't know if you can see this here, so I'm going to blow it up. To the tick, we push into the white zone, reject at 59.23, a little bit higher, it pushes to 59.24, rejects down, and where does it go, right? The next logical target, it makes an attempt towards the white zone, doesn't hit it. Comes back in the second time, and again, for newer traders or traders with less experience, the objective is to focus on the first time into the zone. As you get more advanced, second time's work, the odds drop a little bit, right? So this is all about odds, how aggressive you are, and finding key locations to take your trades. Odds drop, this still holds second time in. Where do we rotate down to? And where are you looking for your long? First touch of the top white zone. We push into the white zone. It holds for 20 minutes approximately. And then we reverse, push back up. This is the third time into the white zone, finally breaks. We get an impulse move above, right? And then I believe if we look right now in the Globex session, Globex low is 59.20.75. And that puts us just a shot beyond today's white zone, not necessarily tomorrow's white zone, but it puts us a shot behind, just barely in after hours to 59.20, and we've now responded all the way back up to 59.28. So we're just trading at the bottom end of this white zone, right? So held perfectly fine. This is the backside test. Once we got above, you'll notice on today's chart, there was no location from which to take a short. If you're the type that likes to short at new all-time highs, be my guest, not my cup of coffee. And you'll also notice that entire move took place, meaning the entire rotation down took place after 3 p.m. This is all earnings-related movement, and I'm not an earnings-related trader. My goal is the same as always, right? I want to be able to relax psychologically, focus on my highest odds location, and make sure that I execute at a very high level. So that's done. Let's go take a quick look at the other markets today. I did not execute my plan very well today in these other markets. I had to leave for to take my children to the doctor or accompany my wife to take children to the doctor. So let's just look at this really fast. So overnight, this is the white zone right here. This is the euro. You can see this is, to just give you some time and space, this is 2 a.m. This is 8:30 U.S. market open. Okay, so you can see, I'm going to highlight it so everyone can see. First touch into the white zone, rotation back up. Second touch to the back of the white zone, rotation back up. Finally, the white zone breaks. If you're involved at the third touch or trying to make this work on the third touch, I don't know what to say to you. First and second touch worked fine from above. Right, this is a pretty small rotation. I'll say the same thing here. Pretty small rotation over here. So this white zone, by the time we've gotten to the U.S. markets, has been really well tested. And you can see we were in the white zone just before the open. It really eliminates me taking any kind of long here. I would note that once we got into the U.S. session and we consolidated for really almost an hour from 7:30 to 8:30, then the first touch back into the white zone from underneath did work. I did not take it. I would have preferred that we gotten down to this yellow zone and then pushed back up to the white zone for a rejection. That's a personal preference of mine. I like to see stretches into the zones. That didn't happen. I did not take that euro trade. That first backside test of the euro trade, I was asleep for this trade, and I did not take this backside test. This is right when I had to leave. The appointment was at 10:15. It hit just before 10 o'clock. It was obviously a very nice trade. From the front of this zone, you took some heat to the back of the zone, and then it gave you a very nice payday down, rotation down, right? Again, staying on the same key location. I need, as a trader, I need an edge. I need a key location to trade from, and I need to know, more importantly, where do I not have to make any trading decisions? Where can I relax my mind and wait for the market to do its thing? It was a really low volatility day today. So let's look at the other markets. Let's go take a peek at CL. You can see CL neither hit its white zone above or white zone below, and it chopped throughout the day. Very uncharacteristic of of CL. Actually, there was pretty much nothing to do unless you were a gifted scalper, and even gifted scalpers kind of it's easy to get chopped up into kind of this price action. Again, neither white zone was hit, nothing to do. And then we finally have the 30-year note. And you can see here, again, in the overnight session, we opened in the white zone, right? So I'm going to trace this out for you so everyone can see it. Opened in the white zone, key location. Pushed out, backside tested, right? Long consolidation in the white zone, which is typical for Asia. We get above the white zone, coming into London Open, and a little bit past London. This is London Open right here. We get underneath, coming into the U.S. session. First backside test on U.S. session. So the entry, which, by the way, Brian, I know you're watching this trade review. Wanted to give you a tip of the hat. You did a great job taking this trade. And if you look from this 154 and 18:30 seconds, your potential ticks available to the downside was all the way down to 115. Let's go on the ask instead of the bid. And 154 and 6:30 seconds from 154 and 18:30 seconds. That is 12 ticks at $33 a tick. That's $300, $400 a contract potentially available to you, and right out of key location, right? And you'll see there wasn't another white zone. Next white zone location is down here at 153 and 30 seconds. So that's the review of the key trading areas. A couple of things to remember. You have to have a written trade plan. This trade plan that I'm sharing, this is my specific trade plan. The objective is to share it with the traders in my room and the guys that I'm coaching so that they can make that trade plan their own and build around their own risk tolerance and how they're going to execute around that. A good example is some people don't like to trade in the first half hour. I'm pretty comfortable with it, but you have to be aggressive to want to trade in the first half hour. The zones still tend to hold in the first half hour at a very high win rate. When I'm talking high win rate, 70, 80, occasionally 90% win rate, right? And again, these charts are all posted on a daily basis. It's not like there's a secret. The charts are posted the night before. The members have them. Obviously, it'd be very hard to run if you're saying 70, 80, 90% win rate out of the zones, and then people looked at the zones and they weren't functioning. They'd go, hey, wait a minute. But the fact is they do work, right? You can relax your mind when you're in between the zones. There is no key location unless you're a visual trader. Remember, visual traders are the weakest traders in the market. They're all day traders, right? And they're hoping a visual location that isn't backed up by evidence of volume or time is going to work. And in a bull market, those visual locations for longs tend to work better. when the bull market or the volatility starts to expand, those areas run traders over, right? What we're looking to do is sidestep those areas for the most part and focus on the areas where, whether the market's highly volatile or not highly volatile, we get key locations out of those. So anyways, my name is Simon. I'm with Trade and Perform Coaching. Anybody who'd like to come and check out the charts and what we do in the trade room, I'm pretty sure it's the best value out there. It's $95 a month, right? And that includes the live mentoring room and education room, the multiple webinars I do through the course of the week, the charts in ES, NQ, CL, 30-year note, and crude oil, right? All posted before the market opens. And anyone who'd like to see how we run a room that really helps traders advance from boom bust traders to consistently profitable traders, send me an email. The email is tradeandperform@gmail.com. I'll blow that up, and you can have a 5-day free trial. There it is, blown up. You can just pause it and get it off. And I hope that works for you. Anyways, guys, have a wonderful night. I will talk to you all. I'll see everyone in the morning. And I hope everyone made money. It's all about staying positive, staying disciplined, focus on repetitive motions from key trade locations and letting the market do the work for you. I'll see everyone in the morning.